Welcome to Day Trading Chart Talk. You can find us on YouTube at www.daytradingcharttalk.com. It's our YouTube channel. And of course, our parent company is www.daytradersetups.com. Welcome to another episode of our Weekend Chart Talk series. Hello. We'd like to invite you to come over to daytradersetups.com and register for a free trial period to our Traders Live chat room. Right on the home page, you can click to register for your free week at no charge to attend a Traders Live chat room. And while you're there, click the tweet button and share our page with your friends. And after you've completed your week, we're going to offer you a 2-month commitment package, 40% off your first month, which is basically giving you our quarterly price, which will give you full membership package access. First 2 months, total price $134. That's non-reoccurring. And at the end of that first 2 months, you can then subscribe either monthly, quarterly, or annually. And while you're watching this video, we'd like to ask you to subscribe to our YouTube channel and follow us on Twitter. Today we're going to talk about inflection points, which is a likely place that a stock can make a different direction. And this is a jumbled up looking chart here because it's just 3 minutes. I wanted to show, to start with, just the significance of little things that you don't think about. This is 3 days worth we're looking at here in a couple of hours, just squeezed in, just to give you some examples. When this stock was selling off, or this, let's say this is going to be early in the morning, 9:45. So this was like the opening bar right here. Hesitated for a moment. This little pink line represents an old low that was created back here at the end of the day on that particular day, 2 days before. Hesitated for a moment, and when it broke down through that low area, when it came back, it resisted. Old support, new resistance, inflection point. Sold off, tried to bounce again. This time ran into VWAP, and we all know that's an inflection point, or high probability of being one, and it was back near that old low as well. And then yesterday, this was opening bar. I'll spread this out a little bit. But first I want to show you here. Right here, when it hit this high, now these green lines represent highs, so it's recalculated if it's moving. And so it was recalculating this high line into a new high right here for this little period. And like I said, this is a very short term. It's a 3-minute chart. But when it hit this old high right here, this level, 199.44 was what the high was right here on these candles. When this stock had sold off 2 days prior. Next stock we're looking at is AON. It's a 10-minute chart. We're looking at 5 days here. First, just to establish the inflection points. And this is why we encourage our traders that trade in our chat room to put these lines on their charts so that when I refer to them, they know what I'm looking at. Or if they refer to them, other traders know what they're looking at. This was a low that was created opening range. Well, actually the close of business on this day was open the next morning, went out and touched it very close to the same place it closed at, and then went on up. But this line is still in play 5 days later. And if you're trading these, here's a high right here. If you notice this high, this was early morning, chopped around, but it touched that vicinity and rejected. And then even here, we did the same thing again. These lines that were back behind us showing up. I'm not sure if they show up on a different chart or not. But get back to our 10-minute. This gap up on this particular day was up in the range within 4 cents of this previous high that came from wherever it came from back here in the history. And it's going down hard. You probably can't even trade this in the opening, this 10-minute bar. When it comes down to yesterday's high, you might could take a trade here depending on the spread. But the inflection point is down here where it reversed at later in the day. This stock is sold off all day. Huge range, couple of bucks. This is around 1:30 in the afternoon when it finally gets to this level. Now you got two sets of pink lines. One is the low that we looked at way back here. It's an old low. This pink line is the previous day's low right here, 2 days before that. It had closed out right there at the end of the day, very near the morning lows, which was not quite down to the old low. So it's got two sets of lines here. So as it's approaching this, if you're looking for those bounce plays, you're aware of these lines. And it just plunges through the first one, but it goes into the older one, pins it, comes back through it on the next bar, and ran up very well. Now it ran up pretty fast the first 10-minute bar here. 132.39 was the open, about 50 or 60 cents, 50 cents there probably. Pull back, that's a pretty big pop. Can you expect the pullback? The next bar opened and went down to a low of 132.56. The value of this line, pink line right here, that was created by this bar is 132.55. So as you get in this trade, even if you didn't take it on the first bar, you want to see it hold this level, and you can take the trade here with a predictable stop just a few cents below where you got in at. The high of this little red bar was 53 cents, so when it got below this line, it couldn't get within 2 cents of it. It sold on off some more, came back up. This is where you want to take your trade. If you grabbed it down here as it came through this, you still got a pretty much can have a pretty short-term tight stop. But you'd have to see this as it was selling into there. Get yourself on a shorter time frame candlesticks, which I will get us there. This is the same line back there behind us of the top pink line. You get yourself on a shorter time frame candlestick and take notation of these values. This is 132.39. This one's 55. So if you want to take this 39 right here, this bar opened at 37, made a low of 35. So you could actually take this on a 3-minute chart, get the bounce candle. If you're already watching and you're aware of your levels, you can take you a trade right here with that stop coming here about 40 cents. The low was 28. 12-cent stop, you can make this whole trade. And this is where you saw the run up on the 10-minute, real high, pull back, came right back in. This is where we were talking about testing that line. This is where you give yourself another chance to get in if you didn't take this trade. But But you got to understand, back on the 10-minute chart, what's going on in the first place. So if you see a sell-off, if you're aware that you're coming into possible inflection points, you can get yourself prepared to make these low-risk entries and get these kind of bounces. It may or may not bounce. We don't know that. We get in with a low-risk entry, it may go right here and reject and sell off $4 more. All you can do is put yourself in a high probability situation in a low-risk trade. One of the videos that I have on our homepage, Linda Raschke makes a comment, is we don't know which ones are going to work or not. And she's talking about taking share size equal in all of your trades, so that when you're wrong on 200 shares and you're right on 200 shares, not wrong on 1,000 shares and right on 200. That's what she's actually referring to, but she does make the comment is, we're taking the setups and we don't know which ones are going to work. Well, these are professional traders. All they know is they got a high probability setup, or they wouldn't be taking it in the first place. And that's what we want. High probability setups at inflection points with low risk. If it reverses here, we can get out on a free trade or a very minimal loss if you want to let it pull back to this line. You might not even have a loss depending on where you got in at. If you put yourself in enough situations that you're coming in at an inflection point and you keep your risk low, you're going to get more good trades to go with those break-even trades and have a highly profitable day. The next inflection point on this chart, you already know where it is. The next day, sold off, same thing, went back, retested this low from the day before, pinned it, tried to bounce, then this low that we got from way back, way back, was holding it down this time, where the first time we went right back through it. So we've tested yesterday's low, retested 4 or 5 days ago low, rejected it the first time. That's why you don't want to jump in some of this stuff. See what it's going to do if you're aware this level is here, because it could very well reject, as I mentioned a minute ago, and go down $3 or $4 more, especially where the market's been the last few days. Comes in, it tests it, it fails. You get on a shorter time frame chart, you watch all the action, test it, it fails, it can't close above it. You go down on a 5-minute chart, and our level here is at 132.39, and for the traders in our room that don't have their chart set up like this, I try to give the levels out when I'm talking about a chart and stock and where it is. And what they can do is take their drawing tool and put a drawing right on their chart, put it exactly on where I'm talking about, and then as the action creates itself around the level on the shorter time frame chart, they're aware of where it is, and if it's ever going to get through it, stay above it. This was that level of that particular pink line. We've been down to a 3-minute now. So see, it hit it, rejected it, hit it, did finally close above it. The low of this candle was 132.39. That's exactly what this level is. It tried to go up, came down, closed right above it. Next candle, it came back down, almost retested the other low from yesterday, and then finally got through here. So you got to know what's going on here to be able to time yourself into these trades. And if you got in even back here, you can still keep your stop down at this level. That's only 10 cents. If you got in on this bar closing above this level, finally it pulled back to a low of 30 cents. We're talking about 39 here. This pink line down here has a value of 28 cents. Put your stop a few cents below that. Even if you got in up here, you still got a planned stop, very low risk. It does hold it, what you want it to do, what you expect it to do, and then you get your trade up here for about 50 cents. It goes sideways and continues on right where it's supposed to go. Another inflection point. You ran into yesterday's close. Gets there, test it, reverses, again 3-minute candles, comes right off of there. This is where you want to exit your trade or have a very, very tight stop. Comes back below here, don't go back and test it again, sells off. Now this is not a big trade, here's about 30 cents. So you think this is back in an uptrend, that don't mean you want to short it right here, you just want to exit your long. You may want to short it if you like to scalp 20 and 30 cent. I don't care anything about it. If I'm going to get in here, I'm going over to 5-minute now. See, the 5-minute actually never closed above there. It's 3-minute, did close above it, opening came straight back down. Your 5-minute tested the close, fell, tested again, fell, opened the bar, didn't test it, and went down. This is why you want to get out. You're using this information. You can keep your stop tight. You don't have to get out there if you think it may continue on up here. It very well could have, but you can keep your stop tight. Now look what happened when it pulled back. You don't have to go short because you figure it's going to hit the VWAP and bounce, which is only, if you took it short, it's only about 20 cents. What I want to risk a dime for to make 20 cents. I'm not interested in 2 to 1. When it does pull back here, look what it does. It goes right back to this previous low here of 132.54, which goes way back to one of these other levels. I can't even remember which one it was. We're looking at it on the 10-minute chart. I remember the level. That's why the pink lines here is it did reverse there at some point in the past. It held there here. It didn't. That's not. This bar did not create this line. This bar did, 132.55. But when it pulled back, this is our 10-minute, it went to that level. The low was 55 cents to the penny. Exact level of the line. So you're aware of the inflection point if you have the levels on your charts. Bounces there. Now you can go back into your long trade, get back above VWAP, negotiate that. This is about where I would want to come in at, and you know you got a defined stop down here, or you can even use the low of this candle, or you could come in down here if you felt like we had the momentum, you expect it to bounce. You don't have to wait till it clears the VWAP. You can get in here where this is your stop. You can give yourself more room when you get to VWAP. You got to make those decisions for yourself, but if you know where the levels are, you've got an informed decision for a low risk entry at an inflection point. This time it runs all the way through the close, zigzags, continues on up, takes out the open, closes right on the open. Next bar opens, the low there is 32 cents. The open was 32 cents. Goes on up, retests high day. That's what this green line right here, this high was 55 cents. Value of this line is 55 cents. So this line got plotted off of that high. So you know you're about done up here, and you can get out. So now you've made a trade here to here. Came in, we were talking about coming in around 39. Ended up making 35 cents. We don't know it's not going any further. Pull back, you can take it again. Even if you wait till you get above the VWAP, you come in this time around 67, 68 cents. Take it all the way up here to 50. Now you got an 80 or 90 cent trade. Just by playing your inflection points, keeping your risk low. So altogether you made about $1.40, and both times you risk about a dime. Next chart is BMRN. Hard stock to trade. If you don't trade this off inflection points, this thing will eat your lunch as it's in these chopping around areas. So you got to get in at the right place to keep your risk minimal to get these kind of trades you can get off this stock. And while you're here watching this video, reach down there and hit that subscribe button if you don't mind, and you'll be notified when we put new videos out. We got some lows back here were established. One pink line off a low 3 days ago, and then it pierced that yesterday and made another new low. We're going to pull back in here and take a look at just Friday's trading. We're on a 5-minute chart. Gaps up, sells straight down, and from this close to this open, that is absolutely nothing but a monster spread. It's a 20 or 30 cent gap down right there. You can't touch this stuff. You don't even need to try. It don't matter. What do you want to try to trade? This kind of slam down stuff when you can just wait on the easy stuff. This is where people lose their money at. And this is absolutely a huge spread, or you wouldn't have had that big a gap right there on the intraday candles. Let the stuff settle down. Take your trades nice and slow with low risk entry. So we got our low was created, comes down, hits it, slams off of it. That's about 30 cent move there on a 5-minute candle. So it's still all over the place. Goes down again, takes that low out again. Doesn't come back up that high. Chops around again. Lots of range here now. These are 20 and 30 cent candles. It's settling in here. They're fighting it out. It's took out the low, but it hadn't took out yesterday's low yet. Yesterday's low was 88.55. Now you see my pink line right here. There's actually two of them. Right here when this new low was created, there's only one of them, I'm sorry. The new low with this pink line coming down through here is recalculating off these lows. It comes on down, makes a new low just by pennies. The low here was 53 cent, low here was 55 cent. You got an immediate bounce. If you're watching this sell-off, you're probably not going to jump in on the first candle, but break this thing down on 1 minute and see what happens here. This was in the morning. Way down here, we got to have our level. Let me get our level on here so we know what we're looking at. It was 55 cents. Grab me a horizontal line, pop it on that bar. It's plotted for us at 55 just so we can see it on the shorter time frame chart. So this is just a 1 minute chart. It comes down, tests the previous low. Remember, this was 55, makes a new low of 53, immediately comes off of it. Now you got a 1 minute bar that sits here. The volume on this bar is 0. This stock sat for 60 seconds and did not trade a single share. And then when it opened this bar, it had 0 drawdown. You could have taken this stock, probably opened at the ask, 64. The bid was probably 55 or 53 or 57. You could put your stop down here at the low of day. You step in this stock for about a 12 cent risk, 88.66. Even if you just run it to the VWAP, that's an 85 cent, 80 cent profit. If you just run it to VWAP, then the VWAPs this year is off of 1 minute. Get over on the 10 minutes, probably going to be a little bit higher VWAP calculation. Actually, it was lower. So you come in at an inflection point. It actually makes it all the way back to the close price, which you know is high probability inflection point. It gets there and it starts all this chopping. I don't want to sit in this through all this chop. This is a 10-minute chart. That's 10, 20, 30, 40, 50, almost an hour it sat there. And then when it finally got above it, it still sat there for another 40 minutes. I don't want to be involved in this, especially on a stock like this. Just get out. I usually put my exit before it gets to the close. 8 cent, 9 cent away. It did get through it, but I don't want it to get really close and reject. Like the low of that candle was 95 cents. The open or the close was 90. So I'm probably going to take that at 95, and I'm going to have me about a 90 cent exit in here. this high was 92, so I'd actually got out on this candle because I know I got a high probability this thing could roll over right here and go all the way back down to here, and it could roll over fast. So I'd rather, if you can sell going up, you're going to end up retaining. And a lot of times I work my stops unless I got an inflection point. I keep working my stops up, and if the stock reverses without being at an inflection point, I end up giving back 15, 16 cents a share sometimes. So if you can sell into an inflection point, you're going to retain about 25% more profit on each of your trades of the profit you had already attained. We got one more trade here. Sold off, came back. Now this is just a Bollinger Band, don't mean anything. I don't trade Bollinger Bands to bounce off of them. I trade Bollinger Bands in this manner here. This is the Bollinger Band I'm interested in, the ones that it's exceeding through, not bouncing off of. But the trade here is that coming back up through the VWAP. You picked up a little volume bar down here. This was a 10 bar high volume bar compared to the rest. So we got a little volume spike right here as it got through the VWAP. This is where people got interested in it. And this is where you should have got interested in it rather than down here at the bottom. If you wanted to try it here, you know, you got these lows right here. It may just do one little green bar and reject and head straight back down to the low of day. But once you get up here and start taking out this little base area, now you got another trade. And you can use VWAP or a little bit below as your stop at that point. And you going from 89.71 all the way back to the open price again. That's a dollar trade if you just wait. You don't have to make this 30 cents when you can play it safer up here. After you got the interest in it, you got through the VWAP, you got through the base. If you drew you a small trend line, you got through that. So you're coming in down in this area, VWAP as your stop or penny or two below. You got a 90-cent trade by trading at an inflection point. An inflection point in this case is a VWAP. Even though it took it an hour to get through there. You don't have to take the first one. You can wait till you got a reason to work through this area. I'm out right here. I probably want to get all the way back up to here before I thought about it and get through it. But after it works its way down, you draw you a trend line. It breaks the trend line. It gets some volume. I use these little Mobo bands a lot of times just for alerts. Got through there. This is all just measuring any Bollinger Band. It's measuring nothing but price volatility. And then once you get up into here, this lower Bollinger Band is pushing away from you. That's indicating that you're probably going to get some higher highs. We're going to look at CP here. I got 4 or 5 more symbols. I'm going to put them on another video. We're going to keep you discussing these inflection points and working our stops and exits. I'm going to cut this video off here on this symbol. This is CP. It's been an hour basing at yesterday's close. It's chopping around. They don't know what they're having a battle here. Let the battle get over. And I'm going to set me an alert on this. I'm going to start looking for things I can set alerts on. And that's what a lot of these things you guys see on some of my charts. That's all these little things are for, is to set alerts. I'm only interested in price action and inflection points, which is old highs, old lows, opens and closes, and VWAP. And this is one of my favorite inflection points. It's something I've been using for a long time to calculate off of as well. These signals down here, just with this one particular one here's on OBV, finally came into it. It's in and out, bouncing around here. And a lot of times I'll take something like this and I just use it for an alert. I can say create alert. It's a true false statement. Greater than 0 is true, 0 is false. So I don't have to change anything. I just click 2 times, set alert, set alert. When this becomes true, it goes off. So it can make me come back and look at something. I've been looking at it, it's still chopping, and that's all I use these for. I don't have it, so I say, okay, if it comes back into play, it tried to one time, I want to come back and look. That's a quick thing I can do. Click, click, I'm in, I'm out, and I can come back later. Another thing I'll do is, I'll tell you about the little MOBO band here. I'll get it on a shorter time frame chart. I'm looking for the squeeze. So I've got the contraction coming in here. I'm sitting here watching this. Okay, if it clears the MOBO band, I want to know about it. I got another alert right here built into my charts, and I shared this particular chart. I share with the traders that use TC2000. You don't have to. If you trade with us, I share this setup, and you can use it for an alert system. This green dotted line coming up indicates that the price has now cleared the MOBO line, and I can use that for an alert. Again, same easy process. Set alert, create alert. True or false. Just makes me look back. So this would make me look back at this price level right here on a 5-minute chart. I come back to it, let the bar close, because it may not close up here, it may pull straight back. Let the bar close. Now you got your entry. You come in with the signal right here. You got a 1 penny drawdown on a $160 stock. Of course, you're gonna put your stop down here at the close of the VWAP, which is about 31 cents. The low here was 39. You got a 10 or 12 cent risk on a $160 stock. It moves from 160.42, dances around. You know, you might get out here. If you do, you made 20 cents. If you stay in it and ride it all the way back to yesterday's high, or up into this area, this was another high from another day. These are my little lines I trade off of. I'm probably exiting when I get right here. But even to there, that's 60 cents on a 10-cent risk. 6 to 1 risk reward. Could go all the way if you wanted to stay in it. I'm probably going to get out in this area. And one thing I do like, when it gets to right here, this Bollinger Band turns back up. This one's pointing down. As long as it's pointing down, I'm going up. Right here, it starts to level off. I don't know if I'm going up anymore. It did, but that don't mean it's necessarily going to. That's what I use my Bollinger Bands for. The bottom band's what's telling me what's going on up top. That's what I want to know. But I really like to use the fade of the lower band when I got a tighter squeeze. Is a really good breakout, like in this kind of squeeze up here. But it's a read. It's based on price action. It's all it's measuring, the volatility of what's going on. But the harder you can get the lower one to push away, the more likelihood you got of continuing up. As it starts to level out, then your trade's going to start to level out. Thanks for watching. Subscribe to our channel. Follow us on Twitter. Come over and visit us at daytradersetups.com. You can get a free week trial into our chat room. Hello. We'd like to invite you to come over to daytradersetups.com and register for a free trial period to our Traders Live chat room. Right on the home page, you can click to register for your free week at no charge to attend a Traders Live chat room. And while you're there, click the tweet button and share our page with your friends. And after you've completed your week, we're going to offer you a 2-month commitment package, 40% off your first month, which is basically giving you our quarterly price, which will give you full membership package access. First 2 months, total price $134. That's non-reoccurring. And at the end of that first 2 months, you can then subscribe either monthly, quarterly, or annually. And while you're watching this video, we'd like to ask you to subscribe to our YouTube channel and follow us on Twitter. While you're here, we'd like to invite you to subscribe to both our channels. The Weekend Chart Talk series is hosted on our www.daytradingcharttalk.com. It's our YouTube channel. And you can just click the subscribe button right below the video here. And then to subscribe to our other channel, you can simply type join.daytradersetups.com, and that'll subscribe you to our Day Trader Setups YouTube channel, which is where you find most of our videos, teaching and trading recaps and so forth. And that's at youtube.daytradersetups.com. So go over there and subscribe to that channel as well. Follow us on Twitter. We appreciate it. As always, full disclosure, the trades represented in this video are for educational purposes only, and they have been replicated in TC2000 by daytradersetups.com.